find it interesting that we have a kind of a similar to interest rates. We have an inversion, right, in the last quarter that private equity financial buyers, let's say private equity non-strategic, just pure financial buyers, are paying more than some on the strategics. As you said, 18 through 20, you've got a pretty sized gap that everyone expects, right? That strategics are going to play a pretty good gap difference between a pure financial buyer, and then at 2021 and 2022, it really came to almost to nothing. And now it's just one quarter, so there's only so much to say about a quarter,
right.
But it's still interesting to see the other direction, the financial buyers, and maybe part of that, and again, that's just asking the question is this a point where we need to close out some funds? We've been holding a little bit too long, right?
Yeah.
So Q3 is, guys, this is a great opportunity. We need to exit some of our positions because our funds have already gone a little too long, and they tend to, in your mind, maybe bid up some of those prices just to get some opportunities out there. And then on the other side, of course, you've got others that are trying to say, hey, I got to put some money to work. So I feel like there's a lot of pieces, not just, oh, that's strange, it's upside down, but I think there's a lot of factors that are in play. In particular, anytime that you have a major disruption like COVID or the Great Recession, it throws everyone's timing off in their portfolios.
Correct.
When there's a bright shining spot, everyone kind of runs and tries to seize upon that, and you get some strange fluctuations.
Yeah, I think it's a combination of those factors. I mean, I think you're right. I think the strategic buyers have been a little bit more disciplined in their valuation approach or their valuation strategy, and that's being a little bit offset by private equity funds that, and as we suggested earlier, there's a limited time factor here. They've got to put money to work, and so with the deal volumes being as low as they are, they chase, when they see a good asset, they're chasing it fairly hard, and the valuations are kind of reflecting that. So it's a little bit strange, when you're seeing those dynamics kind of pull financial buyers kind of up the valuation chain relative to those that you typically expect to pay more, which are the strategics.
Yeah, and again, likely that's an aberration right now, right? You're in a strange position where money is trying to get to work. You've got a lot of money that's sitting on the sidelines. It has to go. Once that, let's call it the dollars on the sidelines gets to a normal level, likely we're going to start to see those strategic prices eclipse the financial buyers to the level we're sort of used to as a percentage of on a turn and a half. But until that dry powder comes down to an average, I feel like we may be in this position for another quarter, maybe another two.
Yeah, that's right, and that kind of leads us to a lot of the valuation impacts are directly correlated with the financing markets, and so while for very attractive companies, we have seen some pretty interesting financing structures or no financing considerations, or certain private equity funds will lean on their lines of credit to fund a transaction in full, to kind of differentiate themselves and then look to refinance out the capital structure later on. Not everybody could do that.